So you want to trade, but you don't know much on what to do, where to go, how to read a chart, anything. All you just heard is people making a lot of money, even people losing money. You heard about Acorn. You may have done a little bit on Cash App or whatever app you may have, if you even have one. All you know is you want to trade, but you don't know anything and you just want to learn the basics. Well, this is my series on helping people like you know where to go, at least know how to type up and know the basics, and eventually become familiar, eventually become intermediate, all the way up into a pro, to where now you know how to place trades, you have a broker, you have all these things and you know the terminology. So this is So You Want to Know How to Trade, Lesson 1, where to go, identifying, and basic reading of a chart. Starting off, where can you even go to just look at any trade? Anything that you may have heard of, options, Forex, where can you go? If you have a laptop or a computer, a place we're going to start off with is called TradingView. This can be your foundation. And once we're there, you can see here we have indices, stocks, crypto, future, Forex, bonds, ETFs. Quick explanation on just some of these, because I don't do all of these, but just simple stocks, companies, Coca-Cola, Google. Forex is currencies going against each other, the US dollar versus the Canadian dollar. And cryptocurrency, Bitcoin, Ethereum, things like that. So you can trade all these things here. But for now, we're just using this just to look, just for you to be able to get comfortable with. You know, now you have a spot on where to go. So now what do? Let's go to search. And as you can see, it has it all here: stocks, funds, futures, Forex. And so I mainly trade stocks and Forex. So mostly, pretty much all the time, a stock or currency, even funds and everything else, they will always be abbreviated into some type of acronym. So as you see right here, Tesla Inc., TSLA. NVIDIA, NVDA. Same with Forex. EURUSD, the euro versus the US dollar. GBP/USD, Great British Pound versus the US dollar. Everything will always be abbreviated. Because I'm predominantly a Forex guy, we're going to start with Forex, and I'll give you a small explanation of that. So we'll just go ahead and go with GBP/USD. Okay, boom. Soon as you see this chart, your mind is already gone. You're confused. You don't know what this is. None of that. Relax. First off, when a chart is always presented in front of you, you should always know at least what's the name of this specific chart. What's the name of this stock? What am I looking at? And so, as we already know, this is the Great British Pound versus the US dollar. So when anybody puts up a stock, you're watching it on Bloomberg or somebody else's channel, or you're looking at it yourself, or somebody just brings up something in your face, know what you're looking at first. And you can always do that by looking at the top left. Most of the time, what it is will be at the top left. And so we can see British pound, US dollar. And so because this is Forex, what makes Forex different from futures, stocks, like I said, they're currencies paired against each other. So because the British pound is on the left side, that means the green candle represents the British pound. Green is the left side for Forex. Remember that. Green is the left side for Forex. Red is the right side for Forex. So what is that saying? Because the Great British Pound is on the left side, These green candles, these are called candles. These green candles, when they go up, that means that the British pound is gaining power over the US dollar. And same with vice versa. Red, when it's going down, that means the US dollar is gaining power over the Great British pound. It's vice versa, because like I say, their currencies paired against each other. So if you place a trade in and you place a buy, meaning you believe that it's going to go up for this particular trade, that means that you're saying, I think the Great British pound is going to gain power over the US dollar, and vice versa. If you place a sell or a put, meaning you believe it's going to go down, you're saying that the US dollar is going to gain power over the British pound. That's number one on just identifying a chart. Number two, as soon as the chart gets put up in front of you, know what you're looking at. Two, where is the current price? All stocks and bonds and energies and metals and Forex have a current price that it is sitting at currently. So for Forex, the price right here, this is what this, so I'm going to tell you what this means right here. For Forex, this is called pips. And so what it's saying is a British pound, one British pound is worth $1.29 if there was a currency exchange. If there was a currency exchange, one British pound is worth $1.29. So that means the pound is worth a little more than the dollar. That's basically what these numbers represent. And that, like I say, that is currently. The market is always changing and it's always moving. So what it is today, it will very likely not be the same in the next 16 hours. The market moves constantly, all the time, every day, all day. Now, another thing that you need to know is simply just looking at the chart. So now we know where to look. Okay, I see we're looking at the British pound versus the US dollar. Whenever there's a versus, it's very likely it is Forex. And now, too, we can understand what these numbers are. We know that this represents the current price, the price that it was at, or the price that it can possibly go to. So now if we look at the bottom right here, let's take this off. Now, if we look at the bottom right here, this is the time frame. You see, March, February, 2025. So now this is 2025. Now going before it, this is 2024. So December, November. So reading a chart is just like reading a book. How you read a book, flipping the pages like this. It's the same with Forex. It's the same with reading a chart. When you're going forward to the right, then that means you're going forward. So as you can see, there's no candles ahead of it. That's because this is where it's at currently. But as there's candles before it, now you're going back in time. You see? So that's basic reading of a chart. Now let's do a stock real quick. I need to take this off. We can do Tesla. It doesn't matter. Everybody knows what Tesla is. Okay. So because Tesla is by itself, now what the difference is, when it goes up, that means Tesla itself as a company is gaining. The stock price is good. It's good. It's gaining. It's doing well. But when it's going down, obviously it's the vice versa. The stock price is going down. The company isn't doing so well. It doesn't necessarily mean that down doesn't always necessarily have to mean absolutely bad. But speaking basic, it's going down. So same thing. Okay, we know what we're looking at. We're looking at Tesla. That's a stock. And then I'm going to see where the current price is at. Okay, right now, one stock of Tesla is $240. $48. You see how we can now easily navigate? You know, we click it. We can search whatever we want. Now that we know what we want, we see where it's at. Okay, we know that these numbers right here represent the current price or where it was or could possibly go. And we see where it's at currently. That's what the blue line is helping us to see where it's currently at. Okay, $2.48. And if we go back, then we see that it was once higher. It was all the way at 400. So this is us going back in time. Like I say, these numbers let us know where the price was once at, currently at, and could possibly go to. So that's basic reading and identifying. Let's get a little bit deeper. So these are my 1, 2, 3, 4 steps whenever I see a chart, whenever I'm looking at it. This is what I always do no matter what. 1, know what I'm looking at. Is it Forex? Is it a stock? Is it crypto? All of that. So since we're on Tesla, we're looking at a stock. Okay, I know I'm looking at a stock. This is Tesla. I see where the price is at currently. And now the third thing is, how is it moving currently? How is it moving currently? So one thing you also need to know is the time frame of these candles, meaning what does one of these candles represent? This D right here, that represents 1 day. So that means one candle represents 1 day worth of time. So here we are. We're gonna break it down. So this one candle right here, it closed at 355, and then the next day we see it opens at 355, goes all the way down. That day is over with, and it closed at 336. So that stock went down a few dollars. So basic reading. See what I'm saying? So now, like I said, we have to figure out how is it currently moving. So right now, this is 1 day. So 1, 2, 3, 4, 5, 6, 7, 8, 9. It's kind of stuck. It's kind of stuck. And this just in this small amount of time, it's kind of stuck. But the next thing that I do is when I see like how it's moving currently, I want to look at how it's moving overall. And right now, it's in a position where it normally does kind of get stuck in this position if we look at it over time, but that's a little too far for y'all. But right now, from what we can see, there isn't really much of a overall direction on where this is going. So I'm going to make this a little easier, and we're going to change it up. We're going to go to, let's look at Google. All right, boom. All right, so Google's current price 166. The past few days, it's kind of been stuck a little bit. But if we crunch it up and look at it overall, look at that. So if we look at the bottom right here, this is March 12th, 2020. So this is 5 years ago. It was around $51. And it has moved all the way up in 5 years to 166 currently. So if you would have placed your money in here around this time, you'd be up. So that's basic reading. That's basic. We're not doing no extra stuff, lines, this and that. Oh, we see. We're not doing none of that. I'm just helping you be able to know where to go. TradingView. Go to search, and if you don't, you can type in whatever name you want. It'll bring it up. You want to type in, you want to look at Nike? Boom. Type in Nike. Nike, come on. Nike, come up. You want to look at Chase Bank? Oh, wait, it's called JP Morgan. I should have put that. But yeah, JP Morgan, boom. Chase Bank, right there. You see what I'm saying? So this is a place that you can go to just be able to just look, you know what I mean? And take some practice on having a basic reading of a chart. So now we know that everything is abbreviated into an acronym. We need to learn what those acronyms are so we could type it in and it'll make it more easier for it to figure out what you're saying. Because as you can see, I typed in Chase. It didn't say that. It says JP Morgan. So we know that next time when we want to look at Chase, we're going to put in JPM. And not only that, we learn what these numbers are, the price, where it's currently sitting at, was at, or possibly could be at. And we can see there's a lot of up, downs, up, downs, up, downs, but crunch it up into amount of 5, 7, even more years, we can see that Google has been going up. And 5 years is not a lot of time. So you know that if you would want to place a trade in Google, you know that putting a buy in or betting that it's going to go up is actually more beneficial for you. That you would be more safe putting it in on Google, because we see Google's going up. It's constantly going up. There's some downs, but it's going up more than the down. We can see that, easily identify that. Versus if we look at Tesla again, we crunched this up. What have it been doing in the past 5 years? Where was it at? Okay. This blocking it. All right, boom, December 20th. We see where it's at. It's been up, it's been down, it's been up, it's been going down, down again. And look, 3 years later, we're down. 5 years later, we're barely up from where we was back in December. You see what I'm saying? So sometimes you have to know when. I understand holding long term. Every stock doesn't have to be held for years. It doesn't have to be. You have to know where and when you want to get out. You see what I'm saying? So that's why looking at these stocks over a long period of time is a good thing, and not just doing some very quick research and then I'm just going to throw it in. It's going to go up. That's not always true. That's not always true. So that is your very basic reading for today. Trading view. Type in what you want to see. You know the price. You understand that it's showing you where it once was and could be. And then just going back over time. And also you can change the worth of time of trading. I mean, you can change the time frame of these candles. So right here, where it says 1 day, you click that, you see that, couple seconds, couple minutes, hours, day, weekly, monthly, 12, yearly. So let's click 1 hour. Now it's broken it down a bit more. So that 1 day worth of time, now we can see what it did within that 1 day, because now we broke it down in 1 hour. So you see now it gets a little more specified. You see up, down, up, down, up, down. We see the gaps in it. We see all types of stuff in the 1 hour. Let's go back to the daily. And you see it's still moving the same. Up, down, up, down, up, down, gaps in it, but it's just showing you a day. It's not as detailed, but in the hour, it's more detailed. We see everything of how it was moving in the day. And the last lesson on simple basic reading is knowing how to look at the candle. So like I said, all these little things right here, these are called candles. So you see how it's thick right here, but then it's skinny up here. That's called a wick. The skinniness is called a wick. And this part right here is called the body of the candle. What does that mean? Why is it skinny here and thick here? And why this one is skinny on both sides? So let me tell you what that means. So if we go right here, it closed. Let's look at this red one right here, the one that the hand is on. It closed at 233. Opened up the next hour, same, 233. And then it decided to go up, up, up. But then it pulled back. You see? When it pulled back, that's when it got skinny. So that means it was reaching this price at 241. It did touch it, but it didn't close at that to remain at that price. So it ended up coming back down and closing at 235. In the next hour, it opened up at the same time, and it pretty much did the same thing. Pulled up, pulled back down. So it's saying vice versa. That means it came down, but it pulled up and then closed there. That's why there's wicks. That means it pulls up or it pulled back. What does that mean? Why does that happen? That means it may have been going down. People was pulling their money out of that stock, causing it to drop. But then there was money put in and it caused it to pull back up to that price that it had that it passed up. That's what's happening. So it's just a battle in between people pulling out money and putting in money, pulling out money, put it in money. So that's a very basic overview on looking at a chart. So now I hope that when you see a chart, you have your steps. What am I looking at? I'm looking at gold. I'm looking at silver. I'm looking at US oil. Okay, boom. We know what we're looking at. We know what field we're in. All right, boom. Where is it at? How much does oil cost right now? Let's see what that look like. All right, oil is boom, 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 however much. How has it been moving currently? You know, what's going on right now in the world in the past 3 months, 4 months, couple hours, all that. All right, boom. Okay, we can see what it's been doing. But how has it been moving throughout time in 5, 10 years? Okay, oil's been going up or oil's been going down. So now you kind of know in the long run or even in the short term run, if you were to place a trade in that, where you would be more likely to win. Like when we saw with Google, it was going up. And then if we were to place a trade in that, we know that we would be safer putting in a trade buying Google.